Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. Tuesday. I thought that we would have some strong opportunities today, but I'm kind of looking at the situation that we're in, and I'm a little bit unsure about what to do about this. I think that we could see some activity in the markets today, but I'm a little unsure about where it's going to lead to, especially here in the treasuries. So let me show you what I mean by going to the charts here. So as you can see, we had a pretty aggressive move down yesterday. During our session, it was quite mixed, but basically what happened is as the day moved on, the sellers went out and we pushed quite a bit lower. Now, in the overnight session, there was some jawboning in Japan, and they have reversed that, and we have interest rates back to just below 4.5 in the 10-year. So with the Japan Central Bank jawboning having already happened, that would have been a good flow to have jumped on, but we've already kind of come back a lot. I don't know which way this is going to go. Also, let's see here. We don't have any news at the bottom of the hour, so I don't have to worry about that coming out here in 2 minutes. And I come over to the S&P 500. You know, they did pull out a win yesterday, but it you know, when you look at it within context, it's not really much to speak of, is it? So equity indexes are still quite depressed, and oil taking a bit of a plunge this morning, but there is still a lot of concern about oil. I'm just reading so much about oil this week. You know, we were kind of talking about it last week, thinking, you know, that this could be a problem. Now, like, the media is picking up on it, all of these sorts of things. Come over to gold and silver. They got hammered yesterday. So really hammered when the treasuries kind of rose interest rates, right? And we got copper. China still struggling. Another thing we got going on here, Bitcoin took a little bit of a plunge yesterday, and they did claw back some of it. Michael Saylor announced that they had bought some more Bitcoin. So when you look back at all of this action here, this is basically Michael Saylor buying. So what's holding the market up from here, you know, from dropping below 25,000 is just Michael Saylor. That's very concerning to me. And his average position is still underwater. And we got the dollar looking strong, 105.5, up from 105 just last week. So dollar looking strong. So when we come over here and looking at like what are the flows that we might possibly have, well, we're going to have to keep an eye out for currency movements. The Japanese, if the interest rates rise too much, if the sellers gain too much of a foothold, we could see that central bank intervention come back into play. In fact, I think that the optimal setup for us would be an initial sell followed by a reversal. But you can see it right here. I mean, we did just while we've been speaking, there's been a bit of a sell, and look, there's been actually quite a bit of volume on it as well, at least at individual points. It looks like the average, like the total change in cumulative delta is only about 5,000 net contracts sell. But, you know, the liquidity is there. There's relatively solid transactions happening here. So do you see how I can kind of say that, like, I'm not 100% sure which way the flows are going to go here, but I do have some signs that there's going to be a decent amount of market activity today. So with all of that in mind, let me blow my nose here first. Actually, let's just let's go to a commercial here real quick so I could blow my nose and so forth, and then we could look around the internet. Okay, so I'm seeing they're able to push across both 12.5 and 13 there. 13, so we've got a little bit of a range developing here. Let's see, is there a desire to push against that 3370 at 14? Not that turn. Okay, it's not as 181. Okay, so it's really actually probably pretty slippery through this whole range of the session, isn't it? Wow, New York City is gearing up to pay over $1 billion on hotels over the next 3 years to house illegal immigrants. That is an insane number, man. What's Nassim Taleb here? The group as a whole will act as the most fanatic member. The entire idea of federalism is to protect from both minority and majority rules, says Nassim Taleb. I agree with, well, I don't know if it's really that the group will act as the most fanatic member, but the general idea to protect both minority and majority rules is true. Correct. Let's see here. Nick Timmeros, the Fed's fight against inflation and the U.S. government's wave of borrowing reignited hedge funds' cash futures basis trade. More at the Wall Street Journal. Well, that is a story that I wish I could read, but I'm pretty sure that the paywall will not let me through. Actually, nope. Are you a subscriber? Sorry. Are you using Ninja Bridge or directly connecting? I am directly connecting through the Rhythmic API, through RTrader Pro plugin mode. Oh, sorry. Wait. I missed Jiwi's comment. I'm having a problem with my Jigsaw. It only shows the inside bid and ask on liquidity columns. Anyone experience? Oh. And you're doing it directly through Rhythmic. And you have in your settings the number of market depth levels set to be, like really high, like 64 or something like that. Yeah. Market depth right there. I have it at 32. I know it happens sometimes to me through the NinjaTrader 8 bridge, a couple of refresh and connects, and it sorts itself out. Well, if it's not doing this to you every day, then I would definitely, restart my whole platform. They were reaching up there for a moment. They came back towards this 13 area pretty quickly. There's about 11,000 contracts I've traded there, so there does appear to be a little bit of gravity at 13, but I would say that the market still looks pretty loose and nimble. So, man, I was somebody in Discord. They're like, oh, I'm on, I made a strategy. I backtested the strategy on the recent weeks of data, about 25 trades, and I'm averaging outsized returns with an R above 6 and a win rate above 65. And I said, well, why did you only do the past few weeks instead of like 5 to 10 years? And they're like, well, I only have like so much data because I have access to the time frame needed 5 to 10 years back. Any idea where to get sub-minute open, high, low, close data for indices? I have premium trading view accounts, so I use TV charting software department. Yes, because most data providers should be giving you, even if you're doing like on a second basis, should give you further back than, a year, 1 to 2 years. My market depth is 10. Yeah, that's unusual. So first thing would be restart all of the platforms. Second thing would be recreate the DOM, like close the DOM, pull your jigsaw up, create a new one, open a new depths and cells, reset it back up the way you want. Anyways, so I keep seeing this, and it seems to be from Forex traders a lot of the time, is they're only backtesting like a week or two. So I had this argument with this guy the other day. I was like, listen, if it's not like a programmatic backtest, then it's not really a backtest. And they were arguing with me about definitions, and I'm like, no, dude, like, look, you use, when you call something science, right? My product, we developed it with science, right? Then you're kind of making an implication about how that thing was done. And so if you make a product and you say that it was developed with science, but then the product doesn't work, are you being dishonest? I say, yes, you are. Right? And scientists would not say that you used science, even if you thought that you did. They're not going to use the word science, because if they called it science, if they admitted that it was science, but maybe it was flawed science or something like that, they're never going to say it was just science. They're always going to point out that it was flawed to avoid lending credibility to the flawed methods that you had used, right? And it's the same thing with the backtest. When somebody comes and says, I backtested it, what they're implying is that I went and tested the historical performance of the strategy and verified that it worked. But if your backtesting is flawed, I'm not going to call it a backtest. I'm going to call it a flawed backtest. But I'm never just going to say it was a backtest, because that could lead credibility to a flawed conclusions, right? And there's this group of people out there that are basically teaching people to just only backtest like a few weeks. And this is very, very harmful to you, because what you end up doing is you backtest it a few weeks, you make some conclusions, you'll go trade on it, and then blow the account and come back and be like, oh, what happened? And then you just wasted a month. that you could have avoided if you had just done 5 years of data, right? And I'm seeing it like everywhere. It's an epidemic and it just drives me crazy. I already did all that and it didn't help. So if you did all of that and it didn't help, then you need to contact your broker. Because that's like a real problem. If you're only getting the top of the book, then that when you only get the best bid, best offer, that is basically like you're only getting top of book. And so that kind of suggests there's something wrong with your data, like they have you on the wrong data tier or something like that. But if that is not an error that I would say, is something that I've ever seen as an error on Jigsaw, like some sort of common bug, like something weird is going on. And it's a very unlikely to be an error with your platforms if you've restarted and recreated everything and you're still seeing it. Although I would say that it's even weirder that it's not, this wasn't happening to you last week. So that's incredibly odd. I guess the other question would be, does it happen to you on all instruments? Okay, they are heading up to the top of this range here. Wouldn't say I'm seeing strong autocorrelated volume long per se, but it is looking pretty solid on the uptrend, more so than the downtrend I felt. Happens on all instruments of contact in my broker. Yeah. This is where, how good is your broker now? Right. How good your broker is doesn't matter until there's a problem. So they came up to the high. They're already at, just kind of briefly kissed it. I do kind of wonder if the balance of flows here today is just going to be long. Like, yeah, maybe the Japanese yen, there's not going to be like direct intervention in there, but like, why would you want to be fighting it or going short at this time? Maybe if, for instance, I have this swing position on that has lost a little bit. Actually, I think it's probably still, 828. Yeah. Maybe it would have been better to have taken it off yesterday. But, I could leave that one on. But, like, if I'm, like, scalping it today, why go short? If it was all... If, because of Japanese yen jawboning, it was all up overnight. And I'm having a hard time sorting because for me, it's kind of like, well, I think that means I should just kind of hold. I guess there could be some selling out there that needs to happen. There's that basis trade would be one reason. JP Morgan's Jamie Dimon warns the world is not ready for the Fed's stagflationary response. I bet that's probably not exactly what he said. Citadel's Ken Griffin joins consortium of investors in bid for the Telegraph newspaper. Oh, I'm really tired of really big guys trying to take over newspapers and stuff. Of course, nobody really trusts traditional media anymore anyways, right? But I want to read about Jamie Dimon. What does Jamie Dimon know that we don't? Having tamped down on his prior warnings of economic hurricanes, JP Morgan CEO warned in an interview with the Times of India that the world faces a worst-case scenario threat of stagflation and is unprepared for central bankers' response, in parentheses, higher rates, to that outcome. Addressing the risk of a harder soft landing, Dimon highlights the fact that no one knows there is a range of outcomes. It will be affected by everything else: Ukraine, oil, gas, war, Europe, adding that I would be cautious. The most famous Fed whisperer fears the market's false sense of complacency at a Goldilocks outcome. I think we are feeling pretty good because all of the monetary and fiscal stimulus, but it may be a little more of a sugar high. We have to deal with all these serious issues over time, and your deficits can't continue forever. So rates may go up more, but I hope and pray there is a soft landing. Okay, so I don't think that he's like saying, oh, I think I know something that you don't, and we should be... He's only saying, here are the range of possibilities. I can see that the market is not very well prepared at this moment for this possibility, which would be if interest rates went higher. The JP Morgan CEO warned that rates may need to rise further to fight inflation, highlighting the fact that the difference between 5% and 7% would be more painful for the economy than going from 3% to 5% was. True. First of all, interest rates went to zero. Going from 0 to 2% was almost no increase. Going from 0 to 5% caught some people off guard, but no one would have taken 5% out of the realm of possibility. I'm not sure if the world is prepared for 7%. I ask people in business, are you prepared for something like 7%? The worst case is 7% with stagflation. If they are going to have lower volumes and higher rates, there will be stress in the system. We urge our clients to be prepared for that kind of stress. Warren Buffett says, you find out who is swimming naked when the tide goes out. That will be the tide going out. These 200 basis points will be more painful than the 3% to 5%. Certainly, the Fed and the market are not expecting rates to go much higher from here. Are Dimon's comments an open acknowledgement that inflation is not going anywhere and laying the foundation for the Fed's recent hawkish tone to escalate? Certainly, it would be a problem for the unprepared. When rates go up sharply, there is stress in debt repayments. How are businesses living with such high rates? The world is certainly not prepared for a 7% federal funds rate. Charlie Jameson, chief investment officer at Jameson Kuti Bonds, told Bloomberg Television on Tuesday, quote, at that level, we would expect that we would have a deflationary asset unwind. It would burst a lot of asset bubbles. It just simply wouldn't be sustainable. Additionally, and away from the main headlines, Dimon commented on the state of the banking system, dismissing claims that recent crisis was triggered by social media-driven runs. I think that is being blown out of proportion. Social media and online banking existed during the Great Financial Crisis. Giving his warnings above on rates, he sees more pain ahead. The problem of interest rate exposure was known to everyone. I do not think we want a system where no bank ever fails, so having a bunch of failures is not a terrible thing, but if it causes havoc in the system, we have to modify regulations to stop that from happening. And guess who would be more than happy to step in and scoop up all of those deposits? Yes, JP Morgan. And then Zero Hedge goes on with its fear-mongering speculation. Perhaps Dimon knows something that many in the market refuse to accept, and with regional banks utilizing over $108 billion in emergency funding from the Fed to fill their balance sheet holes, JP Morgan may be about to get even too bigger to fail. Yeah. Fun stuff. Well, I do think that Jamie's analysis there is correct, that if we went from 5% to 7%, it would be really painful. Like, it seems to me that the market is not as sensitive to interest rates right now. But the current market environment does appear to be causing some stress on people and on households, because there was this polling the other day suggesting that, like, even among families making more than six figures, that they were often taking debt to pay everything. Octavia says bonds weak again. It kind of looks to me like everything that had bought from this swing up here just sold back in. But it did not result in a larger swing. So that suggests to me that there actually is still a little bit of a bid here. So I don't think we can call that weak, just that's the downswing. But maybe there's more to come. Maybe there's more to come. We are in a relatively tight range too, I guess. Like, that's like what? 12 to 17, 10 tick range. I guess that's pretty normal for treasuries, but a little too tight for me to want to try and get involved yet. Although I do kind of have to fight this urge. Like, I think that what would happen to me is if there is a real move and they decide to go one direction, that I'm only getting in like at the break, and then it kind of breaks and reverses on me. So would probably be better for me to get, like, if I wanted to go short, it would be better for me to get in here. But I still don't have a clear direction. I can see there was a pivot, but I also think that, oh, hold on here. I got something stuck in my mouth. Okay, so I was going to say, I think there is an interesting bias that people seem to be prone to, is that we assume that everything is linear. Like our minds are really good at reading things linearly. If you look at a chart and you say, okay, this is it's going to proceed linearly from here, and you could, point pretty quickly to where you would expect it to be in the future, right? If it's following a linear pattern. We're really good at it. I mean, it's easy, but we're really good at it too. But not everything follows linearly. Some things follow are exponential. Some things follow power laws, Pareto distributions, these sorts of things. And we're not very good at all at reading those. And I don't think that the effects of monetary policy are necessarily linear. I don't think that the effects of fiscal policy are necessarily linear. I think that the impact that student loans are having on the economy is probably stronger than we estimate. I still believe that, which would mean, by the way, if that is correct, that would mean that the resumption of student loan payments next month would result in more economic weakness than anticipated, right? I mean, I guess the bet that I should make based on that theory is that there won't be a rate hike in December, right? So they're kind of toying around with it there, but that bid at 14.5 kind of pulled. I would say that just based on the inside bid and offer and the tape and everything, that it does look a little weak. And we could very, we're at a point where we could very easily see the balance of power just kind of tip and the sellers just kind of take full control, right? Let's see here. Nick Timmeros, a government shutdown could blindfold a data-dependent Federal Reserve. Shutdowns in 1996 and 2013 delayed inflation and employment reports by 2 or more weeks. Ooh, okay, that's something that I had not considered and had not noticed happen in the past. Here's a hoping. The 30, you say the 30 looks weak? Well, so like, at the moment, I'm kind of paying more attention to the cumulative delta, right? So, like, 30-year is a really interesting case, for instance, because this move, which was the move that we basically got when we started on the open, was a pretty strong sell. But since then, it's actually been a buy in the 30. So this spot right here at 13 is actually kind of maybe a little bit of a liquidity hole / distribution area. Although, to me, it looks a little bit more like a lack of desire to go for it rather than it is like it's distributing and there's an iceberg there or something like that, right? So I'll set them up there at the bottom of it. What I do see going on, though, at the moment is that the oil is on the upturn and the SPOOs are on the downturn. So we may be getting a concern about inflation and oil kind of flow coming through here, which I would say would be around the same time and playing out similarly to the one that we had yesterday did, right? But the one that we had yesterday was pretty short-lived. I'm definitely more like keyed into it today because I'm more up for a trade, but I really shouldn't be because I do not have a clear I do not have a clear imbalance in the flows that suggests that it should go one way or the other. I thought I did. I thought coming into this that it was they're gonna sell it for a little bit and then it'll reverse and I can buy it. But when I looked at the chart and I realized how far it moved overnight, I realized that's probably not in the cards, that already happened. Okay, well, 2 ticks up there. I'm seeing quite a bit of level 2 activity all of a sudden. So that certainly shifted their opinion of things. Oil's march towards 100 fans snags Fed policy. I'm still of the opinion that we're going to be around the 90 for a long time. Like, we're not going to be at 100 next week, right? We're going to be at 100 like 3 to 6 months from now. So be careful. So if you're going to trade oil, here's what I would recommend. Maybe we should do this. Is look at create like a spreadsheet with all of the inventory reports for the next few months. It's just a line for each inventory report, and kind of put in like what you think they're going to be, like what your estimate of them is going to be, and like what the net changes and everything, and kind of basically trying to predict what the price will be based on the supply and demand. And when you go through and you do that sort of an exercise, I think what you would see is that, yes, oil is set to go higher, but that it will take a little while for them to go there. Now, it is curious that this whole situation seems to be very negatively affecting Biden's re-election bid. Like, some of the polling that I've seen recently for Joe Biden is just really, really bad. And I wouldn't have expected it to be that bad, like, right now. Because I can't think of anything happening right now that would really be shifting people's opinion or anything like that. It's just, for some reason, at this time, everybody has kind of decided that Biden being apparently senile is a big problem for them. Why next week? Because the supply and demand does not suggest that yet. So if it were to get to, so what I'm saying is, if you are just considering the supply and demand, which is the people that have to come in and sell oil because they're producers of it and they're providing it to people, and the people that need to come in and buy oil because they're people that sell it and they need to buy some of it, right? That if you're working on that alone, that yes, oil will go higher, but that it will be a slow and steady march. But if something comes in and happens, then you can always get a spike, right? If it were to spike, though, like if we were to go to $100 next week, I think that would be largely because of speculation. Did you hold that, Uzi? Because that kind of, I tell you what, it came back up there a little bit, really made me wonder. The level 2 shifted a lot. Like, not shifted, but like there was just a lot of level 2 activity, but then it fell back down just as easily. So, kind of looks like they're playing some games, though. Like, I'm not seeing the volume on this yet. It may well be one of those things, though, that like they trade 11.5 and then the volume comes out, right? Just like yesterday. Yesterday, it wasn't until they fell out that you started to see the volume come through. But of course, that was also exactly the point at which it started to reverse, so. Let's see here. The 30-year did fall out there, though, didn't they? Yes, they did. Because 11 was kind of the bottom of that one, and they fell by three ticks. So micro 10-year is up a little bit. Just only like what, five ticks. So are we getting steepening? Yes, we are. We are getting steepening again. So that's another thing that we kind of have to keep an eye on, because we've been getting steepening the last few days, and as it's steepened, it's been a little bit choppy. It's been like the 30-year gets killed and the other ones are kind of a little bit more measured. Yep, there's the 30 going again. I would say pretty decent attacks on that 07, for instance. Do you see how these two didn't react at all to that? I mean, they didn't tick down at least. They did react, but they didn't tick down. At this point, I think it would be very difficult for me to say that, like, the balance of flows today in the treasuries is likely to be long, because that's not playing out at all. Where do you get your financial information from? You have to be more specific than that, because we talk about all sorts of financial information from everywhere. Anywhere and everywhere. Twitter, Zero Hedge, CNBC, Reddit, anywhere I can find it. Never trade against the trend? Oh, you never trade against the trend. The way I would put it is, don't trade against the flow. Because sometimes you might be seeing a trend in price, but not a trend in the orders, right? Okay, so the briefly touching the low there. You could maybe set up for a level break setup here at 12.5. I'm kind of betting, especially with the big order at 10, that does look like a pretty good setup for there could be some stops at 11.5, 10, and 10.5. I tell you what, conservative media really is interested in this story that the government will continue to pay the salaries of people in Ukraine and so forth, even if there's a government shutdown. Well, tell us what 10 and 10.5 are. Are those a key point? Oh, 10 was the point of control from last session and this session. Wow. Like for the level break trade, that one would set up. I don't know. I also kind of feel like that if this really is a sell, that the trend might be further than that at some point. No, is it on our other indicator? Oh yeah. I don't, Uzi, to be honest with you. So like, here's the thing, is that anytime I try and say like it's gonna go to this line, it doesn't do it. Like, it's so weird, man. Like, it will go to those prices and like bounce hard off of them so often, but I can't actually predict it. Like when it's so often, it's like 50% of the time. It's just that the 50% of the time that it does, it's like exact, you know? So like it's the best line that I've ever seen, but I can't actually create a predictive signal out of it. But is that one the buyer's cost basis? Oh, you're right, it is. You're right, it is the buyer's cost basis. So that would be pretty significant, you're right. But I honestly, so I think the issue with the indicator, so it seems to be a very powerful thing, and I think that there is like a really good, like, I guess, theory behind it and everything. It's just like I seem to lack the sophistication to really create some sort of a like a back-tested system out of it. You know what I mean? And I think the reason for that is that when you get a flow, if you got a large meta order sell or whatever like that, right? They don't care where the market maker's average position is, right? Now, in this situation, maybe it matters, because in this situation, are we seeing a large meta order short? Actually, I think we are, but I don't think that it's a large meta order short. I think it's a large meta order long steepeners, which means long 5, short 30. So in that sort of a situation, you might need to put those on like all of the instruments and kind of game out which one you think it's going to hit. So there is 10 though. So I guess I could have taken that. When I was looking at the level break, if I had taken the level break, that would have been $10. But I'm still... Okay, so this is kind of the point at where I think that I can say that we're probably... Well, So there's definitely a flow coming in short in the 30-year. In the 10-year, like that last drop right there from 12 looks like a stop run to me. Like it was a very, very strong acceleration in the change in cumulative delta, right? So trying to take a position at 10 doesn't necessarily make sense, right? Sprayers always have a bigger wallet. Yeah. And see, the issue is still, to me, is like, okay, so like if I'm steepening, I could come in, sell the 30 first, watch the whole curve kind of get pulled down by that, and then turn around and buy the 5-year. And by doing it that way, I might get a better cost on my 5-year. And especially if I think that it's like a bear steepener, like the curve is going to steepen out, but like interest rates are going to go higher, right? Then the 5-year is the side that that's going to be the loser, right? So I think that you're more concerned about getting a good price on the losing side of the spread. That makes sense. Like if you were to think about it, if they were to do it the other way, right? Okay, I buy up the 5-year and then I sell the 30-year, then I'm not getting, well, actually, I'm getting a better position on my 30, but when I start selling it, it's going to come down more. You know, so it's not about this. You want the losing side to be more profitable. It's that the winning side is going to move more. And so you want to do the losing side first when the liquidity is still there. Or sorry, you want to do the winning side first when the liquidity is still there. That's probably what it is. You want to do the winning side first and then take in the losing side, basically against the flow, in order to give you more liquidity for it. Because if you do it the other way around, then on the winning side, then it'll just like get away from you. So I think if I'm doing a spread trade, I want to execute the winning side of what I expect to be the winning side of the spread first. That's my theory that I just came up with. Okay, so there's a tick up finally. I don't know. In this one, they cut right through the line, though. The sort of things that I was always trying to do is like, okay, I'm below the cost basis, and then all of a sudden I cross above it and I try and go long or something like that, and it didn't work. So then I tried doing it as like a profit-taking spot. But then, yeah, you still have to have like a predictive signal, so that didn't really help either. I'll be right back. Oh, you know what? Here's the other thing, though, Uzi, is I watched the cost basis in the S&P 500 a lot more than I did in the treasuries. Because I found in the treasuries that it was like, yeah, so it seems to do the same thing. Like, it will bounce hard off of it, but it bounces hard off of it in one of the instruments. And I couldn't tell, is it going to be in ZB or is it going to be in ZF? Like, I kind of wonder, I don't have it on there, but I kind of wonder if I had put it on ZB, was the bottom there the cost basis? RS. Oh, I am deeply skeptical. I don't know why you would think that the RSI would be of any use. RSI is kind of like one of the easiest ones to test, and what I found about RSI, well, yeah, okay, so what I found about RSI is that RSI is, I think that people think of it as, okay, if it's below 20 or it's above 80 or 70-30, depending on what you wanted, you know, how common of a signal you want and everything, that it is a good signal of a reversal, right? It is not. It is not very good at predicting that there will be a reversal. And so when you get into a trending market, it just gets demolished. So what RSI actually is a measure of, like, the riskiness of a trade. You get what I mean? Like, so if RSI is above 80, that doesn't predict that price is going to reverse, but if it does reverse, you're probably going to get a really solid reversal. Or pullback, at least, right? Yeah, it's a filter, but like, even from that point, why would we think that it's a good filter? On short time frames. So I know, for instance, I have a bit of data to suggest that R squared is a good filter, right? I think I will agree, but will you say that one more time? So let me try and go into a little bit more detail on RSI, okay? So if you, especially if you go on like a daily basis, but I think that this even works on like intraday basis. If you take an RSI indicator and you're just taking entries off of the RSI itself, and you do cut and reverse. So when it crosses above the 20, you go long. When it crosses below the 80, you go short. Okay, that is actually net profitable. Can I show you? I'll show you. I think I have it. I think it's in bands. No. Oh, what would I have put it under? Oscillator, yes. Super RSI. Now I need to go in through and like, okay, so I have a bunch of different versions of it. What are the differences? Oscillator, super RSI. What is smooth? Oh, super smoother. Oh, that's interesting. But I think what I actually want is just RSI strat. Yep. Okay. Oscillators. RSI strategy. 1 minute. Shall we try it on ZN? I don't think I've ever tried it on ZN. And I'm going to say overbought is 80 and underbought is 20. And what RSI period were you using? 14? You used 9. And for a target, let's just start with this 8-tick stop and an equal risk reward target. Include commission and go back to 2018. Okay. So this one, because I'm using a stop, will be unprofitable. If this comes back and like the total net profit is positive, I'll be like, oh my gosh. I'll be like so incredibly shocked. Especially on Treasury. Okay. So percent profitable 47.37. So I have a large enough stop that basically, like, yeah, where is the loss actually coming from? Oh, it's not using my commissions? So that's not even including commissions. I need to edit this account over here and make sure that my commission is set to NinjaTrader brokerage lifetime. So it's actually even less profitable than that. Okay, but like the percent profitable, 47. So it's just kind of like I am getting equal risk reward, so that's working correctly. And you can say that there are periods where it seems to work okay, but like overall, it just doesn't work, right? So what does this show? If you are taking the cross as a predictive signal with equal risk reward, it's random. It's random. It's not. It doesn't give you any kind of predictive entry signal. Okay? So now let's try and change something. Okay? Let's change something. What I'm going to change is first of all, this is forcing it to always stay in the position until you get stopped out. So I'm going to take that out and I'm just going to say you stay in it. And you're going to cut in reverse. So this is going to be in the market most of the time. And I'm going to... oh, actually, I don't need to do that part. So I'm just going to compile it like that. And I just uncheck use targets, essentially. The NinjaTrader backtester is really good. By the way, in the treasuries, it does look like what happened there was they stopped everybody out and now they're back to like the scene of the crime. So I wouldn't say that changes my. I'm still a little concerned about the flows could come in long. Maybe I should have been going reversing there, but we have a moment to look at this. Okay. Oh, that one's still negative. Let's see here. Do I need to change something else about it? Oh, I still had targets selected. That's why. It's like, that's not quite right. NinjaScript looks very much like TypeScript. I mean, they're both programming languages. I think that their kind of approach to a backtester is actually very different. I don't like PineScript's approach to that. Okay, so I think to get this to do what I want it to do, I need to do a little bit of optimization here. Oh, abort, abort, abort. Abort, abort! False. Okay. The thing that I don't like about PineScript is that I don't feel that the language does a very, and the backtester in particular, does a very good job of showing you when your algorithm is doing something funky. So there are always ways to like cheat the simulator. For instance, in NinjaTrader, if you do it on Heiken Ashi bars, it thinks that the close of the Heiken Ashi bar is the close, and so it will use that. And so the backtester will enter in at positions that you wouldn't have been able to get. It will get in at prices that you wouldn't have gotten at that time, because the price that the Heiken Ashi bar is saying was not actually the actual price, right? And when you come into NinjaTrader, it's really easy for a beginner to, not realize that and make that mistake and think, oh, I've got this profitable strategy, start trading and it doesn't work, right? But when you go through and it shows you all of the entries and you can pull up the chart and see where it did and everything, like they have all of these tools for you to come in and verify your trade so that you can go back and look at every trade. Now, I would at least try and go through a week and say, okay, was what the algorithm did actually correct? If I'm going to trade it live, I would want to do that kind of by hand verification testing sort of a thing, right? In PineScript, all you get is like it does, I think, display the entries and exits on a chart, and then it gives you like these overarching stats. And I don't think that those stats just do a very good job of showing you that if there's a problem in your strategy. And so what happens is people will do the backtest in PineScript and they just take what they get for granted. You know what I mean? And of course, people do that in NinjaTrader as well. But like some people in PineScript never get out of that cycle. Whereas in NinjaTrader, you can only be in that cycle for so long because eventually the backtester does kind of show you that there's a problem. I think I might have made a mistake here by going... Yeah. As long as we're staying around 14,000. If this starts trying to use 20,000 in memory, then I might need to abort this and retry a few things. RSI/MACD is toilet paper. Wow. The thing that I'm trying to show, maybe what I would need to do is shift this over into a daily strategy, and then I could show you. What I'm trying to show you is that you actually can get the RSI to show you a total net profit. And when you do that, what you will find is that the Sharpe ratio is terrible. So what that means is, yes, it makes money because it takes on more risk. So the way that I would look at RSI is it's a measure of risk. If the RSI is below 20, that means that the recent trend has been down and you're taking a reversal and you're taking a more risky trade. So when that more risky trade happens, when you win with that more risky trade, you're going to tend to make more. But it's not a very good predictive signal. So if you're using it as a filter, essentially what you are doing is you are filtering for only the most risky trades, right? I think we're okay. I think we're going to be okay here. Although it says that I'm running low on storage, I don't know what that's about. I'm surprised at least. Okay, which drive? And it's the main drive. So I should... delete the DaVinci cache. That should deliver me a couple of gigs. I was a victim of an overly optimistic backtester. Uzi says, no, you don't agree that it just is optimizing for the riskiest trades. I mean, if you're taking it as cross of 80 and 20, then yes. Right, you're always going to take the riskiest trades. You're always going to be trading against the trend, let's put it that way. Okay, so you're only using two variables. Okay, but here's what makes you think that, like, the magical combination of a bunch of them somehow magically changes the way that the indicator works. Do you get what I mean? So if I want to know what does RSI do to my strategy, okay? It increases the risk of the strategy, essentially, right? How do I determine that? Can I determine that by, like, putting a bunch of indicators on there and then seeing out, right? No, I can't, because the performance of that strategy is now affected by a multitude of factors, right? So what I can do is I can put RSI just on by itself and see how it performs, and I can see how it performs against a litany of other filters, for instance, right? So what does the performance of the RSI suggest to us? Well, it's not add any kind of predictive signal to our strategy, from what we can tell. Although I don't think I've ever found an indicator that adds any kind of predictive value to a strategy. But what it does do is it seems to increase the risk of the strategy. You don't win as much, but when you do win, you win bigger. Right? But I can only determine that by putting RSI on by itself, right? So if I come in and I have an indicator that, like, or a setup or a strategy or whatever it is, that the results of it are just random, just shows that the indicator isn't really doing anything and that the results are just Gaussian, then why would I use it at all, right? So RSI and martingale are an ideal combo. Oh, they would be doing the same thing, essentially, right? So what's happening now is I think I've run out of memory, and so the iterations are taking forever. So I don't know if I can just click abort and get this to stop and give me my memory back. You don't have anything that adds predictive value. No, that's not true at all. Because what is it that we have that will add predicted value? Is if we have information that we know that's going to predict the flows at that time, right? Then you have something that is predictive. That's something that, in some isolated situations, I can say that I definitely have something that I think is predictive, right? Because all of my research has been that nothing technical that you can, even in the order flow, is predictive. Predictive signal. Is ATR useful? Yes. Well, so the best way that I've found to use ATR is as a measure of risk, and if that measure of risk is too high, don't trade. It's not giving the memory back. What if I close it? No, it's going to make me restart in NinjaTrader. Okay, so what I need here is... oh, what was the one that we were testing the other day? What was it called? If you can predict... Well, but it's not with theoretically infinite risk. Like, you can go back and you can look at my stats, and you can see the average loser and the average winner. And you can see that based on what my average winner and loser are, is that the percentage hit rate that I get is higher than it would be in a Gaussian market, right? I get about 1.5, so I make about 15 on average. I make 15 ticks and I lose 15 ticks. When I lose, it's lose 15, and when I make 15 ticks. But I still hit around 40-45% win rate, which you would be lower. You would be more in like the mid 30s if it was random. I forget the name of the property, and I forget the last strategy that we messed with. Okay, NinjaTrader did give the memory up, though, so that's cool. So put a stop in the mix where you don't get to think about closing the trade when it's losing, and what happens, the already fat tail gets fatter. If I had like the straight stop on it, it was the Hirsch coefficient, you're right. That one was in Euler. Here we go. Include trade history in backtest is the property that we need. And include trade history in backtest false. So what that will do is it won't save all of the individual trades, and that will keep our memory usage down so that it can go through this fairly quickly. It's funny how important backtesting is, but you traders, yeah. No. Hold on. Let's set this up correctly. You're 100% right, because what I'm trying to tell you is that once you get into the backtesting, the only reasonable conclusion from the backtesting is that none of this technical analysis stuff is really worth wasting your time on. I'm willing to waste my time on it here to help you maybe avoid something. 2080. Okay, the period. Let's start with a period of 10. Let's reduce the number of iterations that we do here a little bit. 1095. The backtesting can prove everything doesn't work except the thing that you do. Well, okay, so it comes back to what is the market, right? Or what is the nature of the market? The nature of the market is that it's competitive. So if you have some sort of a pattern that, you know, really effectively predicts that something's going to happen, the chances are that other market participants are going to catch on to that as well, and that signal will get removed from the markets. So the chances of you finding any edge really in the analysis of a single time price series is extremely low. You're very unlikely to find it. So if you're going to find an edge, then where are you going to find it? Well, for one, you're probably going to have to find it in the places where you can't backtest it. So that would mean either one, you're doing something very discretionary that the robots can't duplicate yet, or two, you're doing something that most people don't have the data for, right? So for instance, if I ran a backtest over 5 years with order flow data, then that would be really different, because the average retail trader doesn't have the ability to do that. So and maybe there's some fund out there that's discovered that and has removed those out, but there might be some that are small enough that a fund hasn't taken advantage of yet, and there aren't other retail traders out there to take advantage of yet. And so you're reducing your competition, right? So if we did backtest with order flow data, which is kind of the thing I'm still kind of working on, maybe that you probably would be. I'm not sure if I will find an edge from that, but I'm more likely to find an edge from that simply because less competition, right? It's just like if you're panning for gold. Where are you going to go and pan for gold? You're going to go where everybody else is already panned? No, because that place is already going to be mined out. You're going to want to go exploring and find an area where the geology and everything is such that there's likely to be gold there, and look for the signs of gold and go and find untouched land. That's why you go to Alaska, because there's just endless wilderness up there, right? Right? So, okay, here's the results. We probably should get one that's profitable. Yes. Oh, that's dumb. That's dumb. Interesting. 1 minute. Oh, you know why? Wait, did I do it? That can't be right. That can't be right at all. So I'm going to do this one. Every edge is time limited. Nothing works forever. Well, okay, but like, okay, we're going too fast. Stick with the class for a second, Chiwi. You have a good point, but you're getting ahead of us. Let's resolve this thing first. Why is it that in 5 years it only takes 61 trades? Is it because on an RSI period of, what is this that I'm using? On an RSI period of 30, that being over 80 or below 20 is just really, really unlikely? I guess so. But I can still, so even though this is not taking nearly enough trades for us to really get good data from it, right? You can kind of see that it's kind of doing this taking excessive risk thing. So it's actually profitable close to 50% of the time. But like, look, your losers are larger than your winners. I wonder where the analysis is, which ones is going to be. Yeah, that's even worse. Because it's saying, oh, it's since 2020 it would have worked. Yes, and in a time period where taking on risk was like the way to win. Okay, so let's go back. The point that I'm always trying to make when I'm showing you guys the backtesting and the technical analysis is that once you have the ability to do the technical analysis, you find that these things don't help you. That analyzing a single time price data series, there's just not much edge to pull out from that, if there is any edge at all. You're going to find something that just using a single time price series, you find an edge, you can predict it in the pattern, then, you know, we could be millionaires. We could start a fund, we could be millionaires. I don't think it exists anymore. There's some evidence to suggest that, like in the 70s, that there was some patterns, and then after that, they disappeared. So the whole point is to show that they don't work. But the other point is to show you about how these different things kind of affect your strategy, right? So if I go in and I do things that take on more risk, then what I will do is I will give myself a higher chance of making money. But when I do lose money, I will lose more. And there's a really good chance that the drawdown is going to be larger than the amount of money that you can afford to risk. Okay. So so those are things that I would call are like things that like take on risk. Okay. So now here's the thing. If you have something that allows you to take on risk and you combine that with something that actually is a predictive signal, then that's where you can make real money, right? Because what you're doing is you're taking an edge that's like a predictive, that's what I would consider an edge, and you're adding leverage to it, right? And that's where you can make money. But you still have to be really careful about the drawdown, and you're going to need to do things to limit the drawdown. That's why I don't suggest trading these like excessive risk things where like when you lose twice as much as your winner. I think that there's a tendency, and I notice even in myself, a tendency to fall into that trap. But by staying out of that trap, you kind of get used to having to manage the risk. And so you get better at that part. So when the market does get crazy and you are into that part where you would have the quote unquote drawdown, you have experience, you have more experience. You know how to deal with it. You know how to sit down and say, well, this is not the market for me. Right? So we go to now going back to the thing that Uzi said though, which is like, but the thing that you do, you can't backtest. That's correct. That's correct. Because number one, we need to look in a place where, you know, there's not a lot of people panning, or and a place where there's a lot of gold, frankly. Because really, I would say that like your informational asymmetry is a situation where there aren't as many retail traders panning over there, and there is actually a lot of gold. It's kind of like if there was this mining operation over here that was using, you know, a fire hose to just wash away the side of the canyon wall, and then put it into a huge machine that does all the sifting and sorting, right? There's still a lot of gold that slips through. And then if you pan just below that, you might be able to find little bits of gold. And if there's not a lot of people panning there, then that might be a good place to pan, for instance. That's kind of the allegory or comparison that I would make, right? But there is a really big problem, which is that because it's a discretionary setup, you can't backtest it, essentially, right? So I can come in and I can look and I can see it's helped my trading. I've done pretty good over the past year. Does that mean that it works and that it's a profitable strategy? No, it doesn't. You can't prove it. So that point at which you have to take a leap of faith, because with any strategy, it's always like, well, yeah, but the performance of it could change in the future. So you're taking a leap of faith by saying that the performance of it is going to continue to stay what it is. You're taking an even bigger leap of faith because we can't prove that it is ultimately a profitable strategy, and we can't prove that you can trade it because you are a major factor in there, right? So we have to go back to empirical evidence. What kind of empirical evidence do we have that suggests that these would even be useful ways of trading, right? But when we look at the empirical evidence, kind of suggests that there is more opportunity in the informational asymmetry, right? So that's why I say the evidence suggests that you should trade over there, and not on the programmatic things. Now, my indicator package, I do not use the indicator package, the things on the indicator package, to make systematic trades, right? You look at the major indicators and what are they actually doing for you? They're helping you see what is the yield curve doing? What kind of information can you suss out from which way the yield curve is going? Right now, the yield curve is steepening. That's not good, because it's when the yield curve starts to steepen back out after being really flat that you get the recessions. So it kind of suggests to me that traders are kind of betting right now on a rising interest rate market that leads to a recession, is what I think that the yield curve is telling me right now. That's a piece of information that I wouldn't be able to see, wouldn't be able to include in my analysis if I did not have the spread charts, right? When I look at the dollar, I can determine when movement in my instrument is due to the order flow in that instrument itself, or the correlation between the instrument and the dollar, or the correlation between the instrument and the Japanese yen. And so that's a really big one. I really don't think that I could trade without my dollar index, to be honest with you. Okay. I also have the other big one is the gap. That one is an empirical behavior of markets that when I see that, I like to get out of a position. I actually do have some back testing to support the use of that one. Although it's as a target, right? NinjaTrader 8 does not come with a spread indicator. NinjaTrader 8, did they add it? Because I don't think that comes with a spread indicator. I mean, I don't see anything that says spread there. LMNOP. The only spread that I see there is the one that I made. It's called something different. You sure that the spread that you have on there is not a custom one? I bet you it's a custom one. I bet you that if you go and you look, whatever it is that you think that you have the spread, and you come in and you look at the, oh geez, what do I got going on here? Cancel. Oh yeah, we don't need that anymore. I bet you that if you open the NinjaScript editor and you look at it, that it's not a system indicator. It will have the icon will be different. Here, I'll show you. And no, you cannot get the dollar index with the data that you're already paying for anyways. The only way that you can get the dollar index is if you are paying for ICE data, because the dollar index is traded on the ICE exchange. spread. So you can see here I have a spread cumulative delta, but it has like a little paper with lines on it. That means that it's a custom indicator. The ones that have the little paper with a little lock are the ones that are like built in. So yes, the things that well, you probably have, I bet you that what you actually have there is my original version of my spread indicator that was before I put it into its own namespace. So you have the version that will calculate it, but there's a couple of little issues with it that it might bother you if you really try going into it. So like, especially the whole thing with like what it does historically and so forth. So yes, I've definitely tried building things to trade ES. You got it from the NinjaTrader ecosystem, the one that I put on the ecosystem. Oh, wait, maybe not. I mean, there might be somebody else that have put one up there. Let's see. He's got a link. Go to site. Okay, no, it's not. It's not me. It's not mine. Wait, let's look at it. 2017. Oh, actually, that might be before me. In fact, actually, because I think I made my original spread indicator sometime in 2017. Now I'm gonna open it up and look at it. Hopefully that doesn't open up Visual Studio. It just opens up Visual Studio Code. Yes, good. Okay. So I'm looking at that and I'm already seeing an issue with that. Not a huge issue, it's just it's not necessary. There's a number of problems with this one, actually. I wouldn't use this one. Okay, so the one of the things that's with this one is that it will calculate it. He's not looking at which bars you're on. What was what? I don't know. So what I'll tell you the things that the paid spread indicator does that this one doesn't. Okay. The first one is that my indicator allows you to add more than 2 data series. The second thing is that mine will allows you to change how it handles historical bars, because this can basically only tell you what the spread was at the close. Mine gives you kind of a little bit of different ways to calculate like the highs and lows and so forth, if you choose. And it will display like the interbar. So what was the interbar? If you had it live, is accurate. And then there's also some logic and handling in there to handle having the multiple data series so that NinjaTrader doesn't like do funky stuff. Because you can get these issues where like you got these 2 data series and like this one updates before this one, but this one has the right data and this one doesn't, and so the calculation is a little bit off and can be not always correct. There's some weird things like that you have to deal with when you're dealing with multiple data series. So that's kind of where the extra value that I put in on it was. If you look at my indicator, it's like I think 500 or 600 lines. So there's a lot more logic in it. And not just from the candles. Yeah, let's see how this one deals with the candles. When's this one? 2017. Not bad. Now, the issue that you get when you go into candles is that some people will do things about how they draw that are naughty. Oh, I think I've downloaded this one before. Oh, did I just click it twice, maybe? Oops. There we go. People usually build off the Hikaneshi. Yeah, well, I had looked at somebody else's indicator to get an idea of how they were doing like bars, but I changed it a lot. Because basically they don't always handle the drawing objects correctly. Open. Okay. So number one is I can see that he's not doing that. So he's probably creating these objects every time. Okay, so he does have some of this logic about the highs and lows, but it's not as sophisticated. But what does he do in on render? Okay, so number one is it's all one big, yeah, it's all one big method. So that's kind of, you would refactor that. Bar paint. Okay. Why would you do that? Is that because he's building the candle, like the wick is the line, the wick? Okay, well, that's part's not bad. And he does do on render target change. That's good. Well, it's not doing the live bit. So like, well, I'll show you on the synthetic dollar index, but the spread does the same thing. Is like, if I make it big. So the ones that are live are colored and the ones that are not live are gray. And you can see here that like the ones that are live have, do you see how the price movement on them looks a little bit different? Because this is the best that we can do with the historical data about what the dollar spread was. But when we're watching it live, we can see what, the actual real high was and what the actual real low was. So my indicator has a logic in it that says, if it's historical, do this. And if it's live, do this. What does render target change do? So, where is it? On render target changed is basically a method that gets called when something changes that would cause you to need to like restart the drawing. So when the chart starts up, render target change happens. Basically, it says, I've created a drawing surface somewhere. Or if you like refresh the page, I think that if you refresh the chart, I think render target changed gets called as well. And what that allows him to do is it allows him to make his brush at the very least. He only does it with the brush for some reason, but it allows him to only have one brush object so that he's not constantly allocating memory to an object and then deleting it every iteration. So he's not getting all of them because you can also do it with your rectangle. He just draws one rectangle and then kind of does it. But every time that on render gets called, he's creating a new rectangle in here somewhere. Where is it actually? Oh, he does only have one object. There's some other things. It gets even more complicated if you want to like do text and stuff like that. But yeah, so that's what if you like download an indicator and you look at the code of it, it's an indicator that like does its own drawing, and they're not using render target changed. I wouldn't use it. And the other thing that I would do is this, is like. If you come to the output and you right click on it, and there is this NinjaScript utilization monitor. And then you come in and you say, okay, how much total time is it using? And you might need to, like only have 2 charts open. So you can have, like, for instance, especially the chart styles, like candlestick, plus, plus. You notice, well, this is a lot lower than this one, but I might have more charts with candlestick on. No, because I think that I have almost all of them switched over to candlestick plus, plus. I don't know. But you could open up 2 charts, have one on here and one on here, and then compare how much total time are they actually using. Right, and if they're not like disposing of the objects correctly and handling all of that memory sort of stuff in the correct C# way, you might find that indicator uses way too much total time MS. Like that's really common. The ones like the footprints that I've seen out there, or at least the footprints that I've downloaded, have that problem. So I guess there are some candlesticks that exist out there now that I didn't find when I was looking around and doing this. They don't do everything that mine does. Oh, we need to turn the music back on. I've definitely never seen anybody do the dollar index. Close that one. Bring that back down. And close this one. Close this one. It's interesting. We had that stop run. We're still at 10. Your cumulative delta runs a lot of MS. Which one are you using? I've always used Sim 22s. And I don't think that one is 100% optimized. I might have done my own changes to it. I don't know. If I haven't, maybe I should go in and look at it. I have my own versions of cumulative delta that I felt were better for like trying to do a back test. But Yeah. This was recently added. Like, this was added in an update last, like, at the beginning of the year, like February. Oh, the factory one? Yeah, well, yeah, and that's the other thing is some of the default indicators seem to be like have some extra resource utilization that seems unnecessary. Yes. They always warn you about custom indicators, but it seems like that some of their own stuff is a little bit greedy. Like, I haven't even had this open for a minute, and it's telling me that a second of that minute was spent rendering candlestick. Yeah, it is that. See, delta V4 Sim 22 delta V4 is probably using more time than it should. I don't think that I ever went and changed and made my own and changed that. Maybe I should. You can see my data pipe uses a lot. But that's because that one's writing to disk. That's a hefty operation. But you can look at most of mine, like spread candles. My watermark. Watermark's a free one, right? Then I have to go back to like, what are the everything that I have included in my suite? So I really think that the spread and the dollar index are the most valuable ones, right? Got the Kalman in there. Is there a Kalman on the Ninja? That one's kind of a weird one. User app shared ecosystem. Still not. Okay, well, if you want a good filter, try the Kalman filter. So I don't use the Kalman filter like you would a moving average, you know, because that doesn't work. But what I will do is I will use a Kalman filter on top of other indicators, and I found that to be useful. So that's why I included that one in there. Multi-ATR. Oh yeah, I have to close this. Multi-ATR is like this thing at the bottom of this chart. So it's just a combination of a couple of different indicators, but it allows me to change the ATR to show it to me based on percentage or points or range, just kind of useful. This is kind of something that we only look at like at the beginning, and I'll look at intraday, and we don't necessarily show on the stream too much, but it is a useful thing. What else? Alice. Okay, this one, you know what's funny is this. So this advanced cumulative delta one, this one I think is so funny. This was hard to make. Like this advanced cumulative delta was actually probably the most difficult one to figure out and make an efficient algorithm for and everything. But it's only relevant if you're trading an instrument that has a wide spread. So like if you're doing DX feed and you're watching stocks, then advanced cumulative delta, you will find a difference between my advanced cumulative delta and your standard cumulative delta, that's maybe like 10 to 15%. Advanced cumulative delta is more accurate. It's not 100% accurate, but it's more accurate, at least according to research. And so I put that in there, but like the number of people that like actually need it and use it, there's probably like one of you out there, you know, using DX feed on stocks and trying to scalp stocks. I think I've only spoken to one or two people that are actively doing that. But if you're doing that, the advanced cumulative delta is there for it. And this is why it's so funny, is because that one was so complicated, I could probably sell that one indicator on its own for $100, but like who would buy it? Because just not very many people use it, right? Alice, this is one that, again, I don't think that any of the technical analysis stuff that you get gives you a predictive signal, but this one is a risk management feature. This is one that tells you that whether there is or isn't enough opportunity out there for you to justify a trade. So Alice can be, if you overtrade, if you like, you know, it's a quiet market and you just can't help but take a trade and you're doing that all the time, because I did that a lot at the beginning, Alice will help you with that one. You have to kind of know how to set it up, but Alice will help you. And the documentation, I think, goes into what it is. This one right here, the market order imbalance. If there's anything that I have a back-tested evidence for a predictive signal, it's that one. Which is why I never talk about it, by the way. That's the one that has some value. Hold prices, this one makes the little sound. So I do use that one. Makes the little sound. Some of these other ones, like the resting orders and stuff, those ones are more for back testing. So I think that there's some use to them, but I haven't gotten into my backtesting sophisticated enough to really know for those ones. The summary rows is just one that people wanted, so I added that one in there. Volatility projected range. This is another one that's okay. So like there is so much edge in this one, the volatility projected range. I wish I could do more with that, because it seems to me that the treasuries tend to respect volatility bounds really, really well. But most of us don't get the data for the indexes to use that one. So that one sucks, because there's a lot of value in that one. And the yield curve, this one I find really useful when I'm doing like a retrospective analysis, like trying to see how the yield curve has moved over time. I find that really useful. And there is a free version of it, but the paid version of it adds a couple of little features that are really valuable that allow you to. It's always a little weird when I try and pull this one up, so hold on a second. So you want to put it on the micro futures. Unlike a day chart. And then you come in, you add it. Oh, you don't need to put the expiry in there. Shouldn't need to put the expiry in there. Am I doing it wrong? Did I do it wrong? Maybe I do need to put the expiry in it. That is not right, though. It should be 09-23. Actually, it shouldn't be 09. Yeah, no, it should be 09-23. Okay. Can you crack? Well, I mean by that. If it's compiled, can you crack and reverse engineer it? I could. That's not something that I've ever spent a lot of time or specialize in. And I wouldn't do either, frankly. But would I? Yeah. Usually it's not worth it, though. I had this friend that spent a lot of time cracking StarCraft to make custom maps and stuff. Okay, so what it shows you is it shows you what the yield curve is today, and then you can kind of drag this around and see what the yield curve was back a long time ago. So you can see how we've gotten real flat up until more recently when it's steepened back out a little bit. So interesting to look at. But that's what that one does. Okay, so I think that there's enough value in the indicator package to justify $100. Okay, I don't go and put it out like $1,000. Oh my gosh, these people that put it out for $1,000, I feel like it's almost dishonest for people, because like you're paying more for the indicators than you do for the actual trading system or the actual platform, trading platform. Like, what value are you getting that's more value than the trading platform itself? I just, you better have really good scientific data to back up the amount of edge that's giving you if you're paying $1,000 for it or $2,000 for it, which is what some people do. But no, I've got a couple of small things. There's 2 or 3 that I use very, very heavily. Yes, there are like similar things out there, but I think that my versions are better. I think it's worth $100. But the main point is, and the whole point, and I don't know why Uzi's saying what he is, because I'm kind of like, yes, that is the point. There is absolutely nothing. I cannot give you a pattern. Your edge cannot come from me because it's competitive. You have to beat me in some way at something if you can make money. So tools can help, but they don't provide a competitive edge on their own, right? There's certain information that you can get out of them. I kind of look at it as more of like a base, right? Where does the edge come from? It comes from things that you discover on your own, information that you have that the rest of the market doesn't. They don't help on their own. No, they don't. They're useful, yes. They're like enhancers. They can maybe help you manage risk or help you find an informational inefficiency or understand the market better, but they don't provide edge on their own, no. Late to the party? I don't know. We had a little bit of a down move, and it kind of hasn't done anything since then. When you come back and think about it, that original trade that we kind of had set up there where it was like the level break trade, or even if you had caught it from where Uzi had taken it, like I could have conceivably have taken that trade, but with the way that it's behaved here, is that really like the kind of market that I want to take, right? I feel like that if I had caught in that one, that I would probably consider myself lucky a little bit if it was for me, because that's not the kind of move that I'm really trying to catch. Well, you can take an RSI and make it help, but I don't think you understand the question that I'm asking, though. How do you know it helps? How can you possibly... So if I go and I smack together 6 different indicators, and just by happenstance, it happens to work, or at least over the past month it happens to work, how do I actually know that it helps? How would you know that it helps? What kind of or rather, maybe you can't know. Maybe it's not something that you can know, but what makes you want to believe that it helps? Right? And so I'm saying, if I go and I backtest an indicator and I can find a statistical aberration about it, maybe it doesn't necessarily a predictive signal, and maybe it's not necessarily a profitable strategy on its own, but there is something odd about the stats that suggests to me that I can combine it in a trading system to get certain kind of statistical properties out of my trading system that will be beneficial to me, right? Then I would have a reason to add it in and think that it helps, right? Or if what makes you think that any good trade you make isn't just luck? Well, because if I think that the Bank of Japan is going to come in and buy, and then it happens, and I predicted it, then I would say that it's not just luck. That's why usually when I find that it was like there wasn't really a strong meta order in the market, and it was just traders trading, and I had somehow caught it, then you'll usually hear me say that there was probably a good amount of luck to it. This one, I think that you could have said, if they come down to the bottom, there's going to be some stops, and it pushed us a little bit lower, because that is essentially what happened. And if you were doing so with the caveat that I don't think there's a large meta order in there. I just think that there's enough open positions that a breach of the low will cause a short stop run. Then that would be different, right? So what happens when you think something is going to happen and it doesn't? Then I was wrong. Yes. So ultimately, in order for this kind of discretionary informational asymmetry strategy to work, you have to be right a lot. You have to be right about 50% of the time. You can say it's fine. You can say add in an oversold indicator. Suddenly it becomes verboten. Well, but again, so why do I think that? So if we'll switch the question around, because the question I'm asking is what makes you think that the RSI is helping at all? Well, what makes you think that the informational asymmetry is helping at all? Well, because we have all of this research about what the market microstructure is that suggests that orders have a really strong impact on price. And that leads to a market that is very statistically efficient, but is not very informationally efficient. And we can prove that part. We can prove that part. If you look for any kind of statistical inefficiency in there, it's very, very difficult to find. The market is very, very close to a random walk. It's not, but it's very close. And meanwhile, if you look at what should the fundamental price be in any kind of fundamental price that you can possibly come up with, you'll find that price is almost never at that. And that the price can stay like overbought or oversold for years, in fact, right? So the market is very statistically efficient and not very informationally efficient. So if we can identify times where there is an informational inefficiency and it's at a key point where order flow is going to start coming in because of that informational inefficiency in a way that I can get ahead of it, then I have reason to believe that I can make a profitable trade. And it will be different each individual trade, but we have enough information about the market to tell us that these things happen and that there's more edge in that than there is in this right? So I have proven information that suggests one thing, and that one thing suggests that if I take that and I trade this way, I should be able to generate some edge. And then it's a matter of, can Seth generate that edge? Right? But what do I have to tell me that RSI would help me? I don't see anything. All I see is I added it to a chart and it seems to work for me, or I like it, but like, why did you even add it in the first place? Right? Because here's my problem. Is like, I might seem like it works now, and then a month from now it might seem like it doesn't work. And then that was a month that I spent on it, right? Tell me when not to trade? Well, okay. So the only time that I trade is when I'm anticipating a meta order. That's the only time that I trade. Because if I know something that suggests that there's going to be more market selling than market buying, and I start to see that happen, that's the only time I trade. I feel like that's a better filter than the technical analysis indicator. I mean, conceivably, you could have a technical analysis indicator that is a good filter, but I'm saying I would need to have some sort of piece of information that suggests that it would be a good filter. No, because if you're anticipating a meta order, I don't think that you would see it in RSI at all. If I'm anticipating a meta order, it's going to be like flat, 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 and then it's going to start selling at a certain point out of nowhere, right? You're not going to see that on the RSI. It's just going to be, RSI is going to be 50, and then all of a sudden we're selling, right? The day before and after triple witching, there you go. How is following a meta order isn't the smart money concept? Okay, so the smart money concept kind of believes that there is a pattern, right? They believe that there's a pattern and that they follow this particular pattern that fools everybody out. And so if you just know the correct pattern, then you can not be fooled out. That's what they think. That's very different, right? This is the opposite of what I'm saying, because I'm saying there is no pattern. Any attempt to try and find the patterns kind of works against you. There's also some things like, a meta order is like a very different sort of a thing, right? So here's the other thing though, and this is why I pick on smart SMC so much, okay? Is that our best trades usually end up pitting us against the smart money concept traders. I'm not saying that like, all of the number of entries that they take, there's like, maybe we're trading against them X, 50%. That's not like that. It's probably actually a relatively low amount of the time. But in the times where I can see a smart money concepts pattern forming and I think it's going to fail, I go right for those. Go right for those. At least right now. Because basically what has happened is, from my research, is that strategy appeared to work for a little bit because it got so popular. Not that there was a pattern in the market, but because people were trading on it, it became slightly profitable. And then it became too popular and it fails every time. And so it's a negative trade. You trade against it. What I'm seeing suggests that like market makers or people that are executing these large orders have kind of figured out that that's a thing and use it to sucker people into giving them liquidity. So when I see that set up and I know that there's a large meta order out there that's going against it, I always go for those. Those are my best trades. So, if we're going back here in this market today, do we have one? Do we have a meta order? Well, I think we do. I actually think in the end that we do. I don't think that it was clear that we would have that's what was going on until about... I mean, here's the issue, right? Okay, so right here, let me make it big. Okay, so question is there a large meta order in the market looking to buy or sell? And we don't have any information that suggests that there would be an imbalance, so we don't know. We're just trying to look at the market to determine if there is one, okay? At this point right here, do we know? Nah, like we're ranging back and forth here. The market just started. Cumulative deltas side to side, we don't really know, okay? What about right here? Okay, so now at this point, we do have a little bit of trend to the downside, and you can see how it like really accelerated right here. So that to me is a stop run. So we had a stop run. We breached lows and we had a stop run. So is that signs that there's a large meta order out there? Not necessarily, because that could just be them stopping them out of the range and then they're going to come back in here and do this. So we can't know yet, right? Do we now? Well, now you have enough data to say, yeah, we have a pretty consistent trend down, don't we? But look at what happened. Look at what happened with Rice. So if we say, like, maybe right here is the point at which we knew that there was a meta order sell. Look at what happens with Rice. It goes sideways, if not up at points, right? So by the time a large meta order is obvious, it's already too late. That's why you have to predict it. You have to predict it. You have to be able to come up here and say, because of X, Y, and Z, the balance of flows is going to be down, and catch it before this happens, essentially. You catch this thing, and then you either take profits here or wait on the pullback. I prefer to just take profits here, because this always screws me up, man, and always comes back. So I would have, if I was looking for a meta order, I would have just taken this. I didn't think that I didn't see one. I wasn't sure, so I didn't take it. There is one today, though, I would say. And if we go back, if we zoom out, I can see that this pattern is apparent across all three of them now. Except for maybe the 30-year. The 30 years is a little bit more complicated, I guess, because there's this whole thing. A bear flag selling? Well, if I think that there's a large meta order and I think it's a really big order and that we're only halfway through it and I see a bear flag or whatever, then I absolutely take those, yes. But I look at a bear flag more as if I'm right, a bear flag should form, and not necessarily once I see a bear flag, I can take that as a signal again, right? Any kind of pattern that you see trying to take it as a predictive signal, it probably is not. But I don't agree with the assertion that it's all just like in risk management. I think that you do have to have like some degree of predictive edge, because all of the research that I've done suggests that if all you're doing is quote unquote risk management, that eventually you blow it. Eventually you blow it. You have to have some sort of a predictive edge, or your long-term expectancy is zero. But risk management is the sweetener, right? It's kind of like if all you're doing is trading the predictive edge, what you make is pretty lackluster. It's only once you apply leverage to it that it becomes like an amazing strategy. But you have to be able to predict the flows. I don't know. Was that there's going to be stops below 12? Because I mean, I set the whole thing up and everything. Is that enough to have made a trade? Yeah, probably. Probably was enough to make a trade. Just not as big of a trade as I would like to see right now. I probably could have taken it though on the break. I guess I didn't do that one because you know, the level break trade is a 50-50. That's the other thing. I'm run out of water. My mouth is dry. I spoke too much today. But that's okay. I was worried that I was going to get too deep into talking and that I was going to miss something, like it really started to turn into a trend or something like that. But right now, I don't know if I have enough support for that. Like, they seem to be pretty happy in this range. I don't know if I have any good reason to think that there's going to be a strong enough impulse to keep pushing us. So see, I said all of that, and then I don't get any kind of a thing back because you know, I'm trying to save people time, trying to save myself time. Like here's the thing: I can program. I could spend all of my time programming technical analysis indicators, right? But which ones should I actually spend the time on, right? I think picking up ZB has been weak, adds a little edge, but that will disappear as well. Well, no, I mean, right now, knowing that the kind of the trend in the yield curve is steepening is, I think, been a very important factor for this market. Yes. I don't remember what was the price that we were at. Like, was I able to get 4.5? By the time for the level break, I don't think it was. I think it was, but I think it was maybe still a 20 tick trade. So maybe it would have been worth it. So the thing is that like the micro 10-year moves a little bit more like the 30 than it is the 10. So if I'm seeing that weakness coming into ZB, I should probably be more, you know, what is the word that I'm looking for? I want to trade it. If we're going down and I'm seeing it steepening, I want to trade it because that means that my 10-year is going to move more, right? Opposite on the opposite way. If I can see that we're still steepening, but they're buying it, I'm not going to make as much in my 10-year trade. And that's where probably I should be switching between them. But when I look at the spread, it always makes me be like, nah. Yeah. Which kind of is problematic because I kind of feel like that if I started trading these other instruments more, that other people would start trading these instruments more and the spread would come in. But we all just do the 10-year. Chicken and egg problem. It's aggressive. Does kind of look like they're likely to break the low here, doesn't it? It's really hard for me to see them like touching it at 07.5 and not want to see a stop run, right? It would be kind of odd timing for a run like that, though. Why do you think the Forex market's been dead even more today? Has it? I don't know. I guess the dollar has been pretty random, hasn't it? I do think so. So I guess here's another thing is that I think the things driving the flow today in the treasury is oil because oil is on the upturn again and they're above 90. Oh, no. Yes. They're above 90 now. And oil is kind of like on another leg of it. And as that other leg is coming through, you're seeing the treasuries move. This makes things difficult for me because I don't think I have any idea how to know when oil is going to start trending like that. You know, if it's just a correlation with oil, I'm going to have to learn to trade those probably. But are you aware sometimes my little thing, are you aware you have a bid in the 5-year? Oh, whoops. Did I click that? I should have that set to not even allow me to put orders over there. There. All of the accounts are disabled right now, so. So, by the way, what would be something to make me think indicator X would be useful, it's worth investigating? Well, if I have a research study. So somebody posted a research study that I'm just in Discord that like just the title of it interests me. A multi-market comparison of the intraday lead-lag relations among stock index-based spot futures and options. Using 1-minute data, we explore the dynamic variation in the intraday lead-lag relations between stock indexes and their derivatives through a comprehensive study with broader coverage of research objectives and methodologies. This paper provides explicit evidence that the futures and options exhibit price leadership over the spot market, and the options is ahead of the futures on most trading days in all three markets. Oh, really? Because that is kind of like the whole reason I've always given you guys that I'm like, I don't really trade ES because... Yeah, the options are ahead. Okay, because that would mean to me that like, if I really want to read order flow and make good calls in ES, I need to see the order flow in the options, right? This paper also reports a new finding that the relation between the derivative and its underlying index reverses when the index return has a significantly larger mean value. And the reversal phenomenon is also observed in the relations between the futures and options, which enriches the empirical results of intraday lead-lag relations. I'm not sure I understand what that means. The relation between the derivative and its underlying index reverses when the index return has a significantly larger mean value? So are they saying that when the index moves a lot that day that you're more likely to see the futures selling? Is that what that means? I think that's what they're saying. Oh, they did make a new low there, by the way. This one is like, at this point, we have evidence of meta order sell. We are seeing new lows, so you could say that this is a second leg. So I could probably trade that one if it wasn't like 8:49. I wasn't like 5 minutes before I go. I could probably trade that one. I probably needed to have, you know, when I said, well, they're touching, what was it, 07.5, I probably would have needed to take it at 07.5. I've been struggling with this market just because, like, you know, there was a period where I kind of thought we were coming, I was like, I think we're coming into a period, and it actually wasn't. It was actually, that was the period. And I called that period wrong. I absolutely called that period wrong. And then when we came into the period where I thought that stuff was going to happen, it was like, I didn't really see the opportunities for me. And so now I feel like I'm just sitting here, and this one today, I think maybe I could have participated on. You know, I guess my problem though is this. You're seeing yields kind of push higher a little bit. It seems like there's some speculation coming in about speculating about higher yields. But I'm still looking at all of this stuff that's ahead of us in the next month and thinking that, like, you know, it could just switch to risk off so quickly. And I think that's maybe why I've been a little bit reluctant to just jump on board some of these sells. I don't know. They are coming back to the cost basis there, but here again, it's like, okay, so is it going to bounce off of that? it seems like unable to predict that. They might just slice right through it. Okay, moreover, these conclusions still hold under the impact of extreme events, for instance, the outbreak of COVID-19. Finally, we construct a pair trading strategy based on the intraday lead-lag relationship, which can get better performance than the corresponding spot index. Really? Our findings can potentially help regulators understand the price discovery process between the index and its derivatives, and also be of great value for timely adjustment of investors' intraday trading strategy. Timely adjustment of Oh, there's some real complicated math in here. They're showing me matrices and crap. Huh. I'm definitely going to read this today. Seems like the best piece of research I've said anybody's shared in a long, long time. When was this published? A year ago? 14th of May, 2022? Doesn't look like something that would be posted on archive.org, though. So. Still kind of slow there at 06. Like, if this is like meta order sell, you know, like, wouldn't it be still pushing? I don't know, 8,000, 6,000 at 06. It kind of looks like I like maybe the trade you're making is like overnight Japanese yen pushed higher and pushed interest rates lower because of jawboning from the Japanese central bank, from the Bank of Japan, and now speculators are retracing that move because they don't think it matters or something like that. They want to fight Japan. But we're not being correlated with Japan right now, are we? We're correlated with oil. Yes. It's oil. It's oil that's moving us, man. This is the second day now. Oil that's moved us. So now I'm like, I'm an oil trader now, huh? I think that's a problem for me. I don't think that I've always had difficulty with the oil market. Maybe we could find some great research here about oil. I would hope. ES futures could be used as a leading indicator to trade some stock that is a part of... Absolutely. That's kind of what it suggests. But it also kind of suggests that, like, you trade the options and then... I don't know. I don't know what their strategy is, so I have to read it. The way that they described it sounded like something you could create a fund out of, right? See if the results are actually significant enough that it would work for a fund. It sounded like something that would maybe be too sophisticated for us to do retail, but if you had a fund, you might be able to do it. You just have to look. I just have to read it. 855. I want to come back here and kind of try and look at this from the higher view. So I did say 08 is some really strong long-term support line from before the pandemic that I drew on my chart, and I don't remember what it was about. But I wouldn't just draw that on there because like it was support before, like because of a chart pattern. there was like a reason, like we had seen it as the market had seen it as a key level in the past. And it was the low from the overnight is a little interesting. But when I come out and I take the high level view, I'm seeing, wow, rates are really pushing aggressively. And there's no way for me to know how long they would continue pushing. Because the issue I still see is, okay, yeah, I can see there's a trend in the treasuries, but what about, there's two sides to it. One side is, what about student loan payments restarting? What about the government shutdown? What about the price of oil? What about UAW strikes? But then the other side that I see of it is the market is like really positioned a certain way, and I'm concerned that like a short squeeze in the S&P 500 could materialize. Short squeeze in the S&P 500 could definitely assist those rates in going even higher. And I do remember back when we were like close to 4.2, and then we got to 4.5. And that was kind of where I was like, it seems like 4.5 is in our new future. And I didn't take advantage of that one. So I'm seeing a situation where it seems like I should be making a call every day on like, this is the direction the meta order is, and I'm not. I'm like, I can't seem to get myself to do it. That would mean that the internals are, yeah. I did for a month, like, had all of the internals and stuff, and I did a lot of really, really interesting kind of forms of analysis and strategy on them and everything, but in the end, they just ended up being break even. They just ended up being break even. It was interesting though. Like putting how many stocks are up versus down, and putting a super smoother on that is like, it's beautiful the way that it works. Really, really kind of shows where a moving average like a super smoother has some benefit over your standard moving average. But it was break even. Well, it's time for me to get going, guys. Shall we just put the title of the stream, Rates March Higher? Or rates pressure higher despite BOJ jawboning. Not despite, against. There it goes. You think they'll make it to 108 too? Kind of think if this is the meta order that it'll get down to 108.02. But I gotta go, guys. Stay excellent, team.